Welcome to week 6 of scaling my $25,000 paper trading account to $32,000 in 52 weeks. Last week we made about 0.5%. We are working with a total of $26,000 at the beginning of week 6. So first, let's go ahead and start with the covered call options. We did get assigned here the 500 shares of SoFi last week. As the market dropped pretty significantly, we were assigned 500 shares. 3 at $17.50 and 2 at $17. So an average entry price of $17.30 for that one. Chewy, we did get assigned on another 100 shares last week. Our entry price is now $22.50. So we will be able to sell cover calls on both Chewy and SoFi. Let's go ahead and get started doing that now. We're going to start with Chewy here. I'm going to pull up Chewy so we can start selling a covered call for expiration this Friday. I'm going to choose the June 12th expiration date. I'm going to scroll down here. We do own 200 shares of Chewy. Our entry price is $22.50. They do release earnings this week, so that's why these premiums are going to be inflated. I'm going to go for a little bit higher and actually go for the $23 strike price. This allows me to potentially get an additional $50 of upside per contract, so we could get a total of $100 additional dollars of upside. Chewy has been trading pretty low lately. I do think they are due for a breakout here. I'm going to choose sell call. So I'm going to choose 2 contracts here for sell call. We're going to collect $34 per contract for doing that. I'm going to go ahead and confirm and send this off. We do own 200 shares now. We're going to get credited total of $68 for doing this. Perfect. So I just sent that off. Next one we're going to take a look at is SoFi. We do own 500 shares like I mentioned earlier. Our entry price is $17.30. We're going to try to sell a $17.50 cover call for 500 shares. We want to agree to sell our shares at a higher price than our entry. We don't want to risk losing our shares below that price. So I'm going to choose the $17.50 strike price here for SoFi. Make sure the correct expiration date selected. The premium is looking like $11 on $17.50, which is pretty good. That's about a 0.6, 0.7% return on SoFi. I'm going to go ahead and choose 5 contracts here of SoFi, $17.50 strike, $11 per contract. We will collect a total of $55 for doing so. Perfect. So we do have all of those covered calls filled. We do have a total of $11,000 in stock now. So we're about 40% stock, 60% cash. Now we can start working with the cash and sell some cash secured puts. So first cash secured put we're going to take a look at is Chewy. We're going to continue to try to acquire more Chewy as it goes lower. I am confident in its recovery. We already sold those cover call options. I do like the $17.50 strike. These premiums are inflated, like I said, because of the earnings report that is coming up Wednesday before market open, which is June 10th. So I'm going to go ahead and actually sell one additional put option here at the $17.50 strike, collect $22 up front for doing that. This is about a 1.2, 1.3% return here on Chewy. So I'm going to go ahead and send that off there. Perfect. So that is the first put option this week. Next one is going to be on Iron. We have been selling puts on Iron this entire challenge. We have never gotten assigned. That is the ideal situation. We want to continue to do that. Put up capital, agree to buy those shares. We have not been assigned so far. I'm going to continue to sell put options on Iron, way out of the money to collect a decent amount of premium. This stock is pretty volatile overall, but we are able to collect a large premium, like I said. So it is going up pretty significantly. We can see now it's trading right at the middle of the Bollinger Band, which is fine. We're going to actually agree to buy at the bottom of the Bollinger Band here, which is sitting right at $47.50. I'm going to choose the $49 strike price here just to collect some additional premium. I really don't think it's going to reach $49 by the end of this week. Even if it does, it's not a bad thing because we can start selling covered calls right away. So we'll collect $41 for agreeing to buy 100 shares of Iron at $49 a share. We're going to go ahead and send that off. Perfect. So we got that Iron contract filled. I'm going to go ahead and look at the next put option, which will be Oscar Health. They absolutely exploded today. They're up about 10% on the day. I was hesitant about agreeing to sell puts at this level. I do think they can still continue to reach 30, 35 by the end of the year. I've been saying that since the beginning of this challenge. I think they're up more than 20% since the beginning of this challenge. So we have not gotten assigned at all on our cash secured puts. I'm going to continue to agree to buy these shares at a low price. Considered low, quote unquote, because it's gone up already 10% today. So I'm going to actually choose the $24 strike price, which is actually right in the middle of the Bollinger Band here, right near 23. So I'm going to choose the $24 strike price. We're going to collect $20 of premium per contract. I'm going to sell 2 additional contracts here of Oscar Health. Agreeing to buy at 24, we're collecting $20, which is about a 0.7, 0.8% return on Oscar Health. So I'm going to go ahead and fill those there. Perfect. So that is the last cash secured put for this week. You can see all of the amount of premium we've collected right below me here. I will calculate this every single week at the end of each of these videos. Tune back for next week. We will be doing the exact same thing, see if we do get assigned on these puts that I just sold. And we're going to continue to run the wheel strategy and make 0.5% to 1% every single week. We will get to that $32,000 amount in the 52-week period. If you want to learn a little bit more about how I do this in my real account, comment the word call down below and I'll DM you a free link where you can actually book a free intro call with me. We can discuss how you can get started and how you can implement this. All right, see you guys next week.